Hello, everyone. Tony here. US stock markets dived overnight as President Trump intensified his criticism of Fed Chair Jerome Powell, raising concerns over central bank independence and unsettling investors. The fallout saw the US dollar weaken further and sees the Euro USD up almost 6.25% month to date, nearing its largest monthly gain since May 2009, going back 16 years ago now. April has been particularly painful for European and many other international investors who began the year overweight US stock markets without hedging their FX exposures. And this is based on, or this was based on the usual correlation that says if stocks fall, the US dollar will rise, providing a cushion to the falling stock value. Now, the opposites actually happen, and we're seeing both US stocks and the US dollar fall in tandem. And this is very unusual. But if we look at what that means for these European investors and using the S&P 500 as a benchmark or a guide, these investors are suffering an 8% loss on their US stock portfolio this month. And that's being compounded by an approximate 6.25% loss if their US stock portfolio has not been currency hedged. So it's quite nasty out there for some of these non-US offshore investors that went into the start of 2025 overweight US stock markets. Now, former Boston Fed President Eric Rosenground summed up the situation nicely on X. He said that unless the goal is to make the US trade like a third world country, then threatening the Federal Reserve's independence only makes the US less attractive from a foreign investor's perspective. Now, zooming back out and looking at what comes next, well, we're going to be watching for more tariff headlines and potential trade deals, but we're also going to be watching for some of the economic data which comes out this week. We get the S&P flash PMIs and the durable good orders, and they will be looked at closely to assess the impact of tariffs and trade policies on the economy. We also get earnings reports from two of the Magnificent Seven, Tesla and Alphabet report, and a handful of big industrial companies, including Boeing, 3M, and Lockheed Martin. So that's going to be of interest to investors as well. Let's take a look at the charts of the S&P 500 and the NASDAQ to see where they start this holiday shortened week. Okay, the NASDAQ daily chart. Now, we've been talking about being in two minds whether this was a wave one or a wave A, a wave two or a wave B, or a wave three or wave C. And in that context, we're unsure whether this was a short covering rally or the beginning of a new leg higher, if you like, in the NASDAQ. We actually sided with the view that while it was possible, and it still is possible, that the correction is complete, that the way that these markets traded in this resistance area here would have a large say in their fate. Now, following this downdraft from this 19,234 high, you would have to say that the odds favor a retest of this low from early April and potentially down into the 16,000 area for a wave five. Now, we need to be aware that that is probably our base, or it is our base case at this point of time. But if the NASDAQ were to get above 19,500 and above the 200-day moving average, then we would also need to be mindful that the correction is probably complete and that the uptrend has resumed. So I guess in a summary, while below this resistance area here, we are looking for another leg lower for the NASDAQ new lows. For the S&P 500, a similar story. This is wave one or A, wave two or wave B, and wave three or wave C. This is using Elliott wave analysis. Now, what follows if this is an impulsive five-wave move should be another leg lower down towards this 4,700 area. So we're looking for a break of this 48.35 low with scope down towards 4,700. But we also need to be mindful where we're wrong. And we will be wrong if the S&P 500 took out this 54.81 high and also took out above here the 200-day moving average coming in at 57.50. But initial indication would be up above 54.80 to 5,500. And while the S&P remains below here, then allow for another leg lower. Thank you for listening and have a good week ahead.